What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, your go-to destination for all things harmonic technical analysis. I'm your host, Lord MC. In today's video, we're going to cover what to expect in the upcoming week, as we do have some key economic data that comes out. One of those key economic indicators is the retail sales, so that is just data that helps us understand the pulse of the consumer spending, which is a key critical factor in gauging economic health. So high retails can suggest a robust economy, while a dip might suggest that the economy is slowing down. We also do have the Michigan Consumer Sentiment Index preliminary edition, so this index provides us with an early insight into confidence and optimism of consumers regarding the economy. So think of it as a preview of economic sentiment that can influence various sectors of the market. We also do have the options expiration, OPEX. This is the key event marking the expiration date of options contracts and injecting increased trading activity into the market. So it's going to be interesting to see if there's any volume picking up right before that date, which is on January the 19th, Friday. So we also do have continuation of bank earnings this week, so it's going to be interesting to see how they report. So if you like this type of content, make sure to hit that like button and subscribe if you haven't already done so. Before we get into the charts, I do want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into the charts. Alright guys, let's jump right into the SPY here. So SPY, very interesting close the past few days here. Thursday you had a high volume shooting star, and on Friday you had a decrease in volume. So it's still, in my opinion, too early to see if there's going to actually suggesting that a potential top is incoming and a recorrection is going to happen, or you're just having a little bit of decrease in volume to see if you're going to squeeze out more of the bears here and continue pushing the market. So what can we expect harmonically here moving forward? We do have the bearish shark pattern. Obviously it's still above the 90 EMA, so it's continue to be bullish here within the market. It's still a bull market. So what can we expect this week? I'm going to go over weekly here real quick to see how much we did in volume. So SPY on the weekly did have a decrease in volume. It's still closed above the prior week. So what can we expect on moving forward? So I do believe whatever the banks are going to report, or however the banks are going to report, I should say, I think it can give us an indication whether we're going to continue pushing higher or just slightly come back and retest some levels. So moving forward here, just looking at the HSI and the RSI and the EMP RSI, you could tell the RSI and the EMP RSI are kind of flatlining, suggesting maybe a consolidation period is going to happen. We do have FOMC, which should happen at the end of the month, so there could also be a period here where we just consolidate and figure out if the Fed is going to increase rates or not, or cut them as well, because we're expecting a potential cut here in March, but we'll see if that is going to be the case. So I wouldn't be surprised here if volume starts to consolidate here to figure out what the Fed's going to do up until then. So if we do consolidate, if there is low volume, you could suggest that maybe a pattern formation is coming here. This could be a potential rising wedge here. You could also have a potential symmetrical triangle. So it's really hard to say what it's going to do. I think you do need a little bit of more action, a few more days to signal if there is a potential downturn here. So harmonically, the HSI, I'm looking at the HSI here, and it did cross the midline obviously on Wednesday, and it continued pushing higher. So if it does continue pushing higher, right now if I zoom in here, the HSI does not look like it's curling. So within the harmonic pattern, if this continues to go to the overbought zone, I do think you will come back and hit the all-time high here, which is the highs, which is at 479.98. Above that, then you continue pushing here. So this is going to be very interesting to see. Right now you have the 2-day kind of suggesting a potential shooting star. Obviously we'd have to wait for Tuesday to finish that candle, but right now it's still a little bit of indecision in my opinion whether it's going to just consolidate here and just wait for maybe OPEX as well, or until next week. And excuse me, 2 weeks from now we do have the blue chips reporting as well. You're going to have Microsoft, Apple, and all those big companies reporting. So we could also be here consolidating until those earnings get released and see if the market wants to continue pushing off of good reports. So definitely interesting to see what the SPY is going to do. So this week I've just been looking at maybe to come down here. If there is a little bit bearish action here, maybe to come down to the 90 and maybe between 474 and then 471. You lose 471, I think you can come down all the way to 466. 466 has been a strong level of support. So again, we could just be trading in this week within that range. So I'll be looking here to see if SPY is going to continue going forward or not. So definitely keep an eye out on the SPY. Jumping over to the Qs here. So the Q is very similar to how SPY reacted. On Thursday you did have high volume, and on Friday you had a decrease in volume. So what can we expect here? For the Qs, you do have similar setup as well. With the Qs, you do have a shark pattern, a bear shark pattern. So one thing I do want to bring to you guys' attention is that there's a potential M formation happening here So we know that in harmonics, when an M formation forms, that is a potential bullish harmonic forming. So obviously double tops are also bearish within the sense here that if it's a double top, you come to that neckline and you lose that neckline, you can come back down, which is where that last leg of point D would be generating, and a potential reversal back up could be coming. So if that is the case, the Qs could potentially push even higher. So still too early to tell. Right now it is finding support here above 408.71, which was the previous all-time high. So if it manages to hold support here, maybe it starts consolidating again. You wait for the economic data or the earnings report, or even consolidate up until FOMC. So if we jump over to the weekly, it's just very kind of similar here, except for, I should say, not similar here on the weekly. Similar pattern, shark pattern here on the weekly. You did have an increase in volume compared to prior weeks. So what can we expect? Let's say the data and everything's bullish within this week, and OPEX and all that good stuff. If it continues pushing here with high volume, the next level you could be looking at would be 424.12. Obviously, this is on the weekly chart. This could take some time, but that would be the next level. Above that, you have hop at 445.47. If you manage to find some resistance here, and you can come back down all the way to terminal bar at 387.98, which was the key breakout here. As you could tell here, it kind of hovered here, and then it pushed up. So it's still too early to tell. We're obviously going to have to wait just to see how the market reacts within this week. So definitely keep an eye out on the triple Qs. Jumping over to the Dow Jones here. So the Dow Jones, very different than the Qs and the SPY here. So you did have a shooting star as well with high volume on Thursday, but you had continuation with that selling pressure into Friday. It wasn't above that level, but it wasn't also too below it. So it's average selling here. So there is some pressure coming into the Dow Jones. It's going to be interesting to see if there's going to be continuation of that selling pressure into this week, or if you're going to start consolidating. One thing I'm going to be looking at here, obviously we don't have a harmonic pattern on the daily, but I am looking at the HSI midline. So the HSI midline, you never really came to that midline and is now coming back down. So if we assume that this is going to come back to these oversold conditions, the next level of support I would be looking at here would be at a 21 EMA, which is around 373 and change. And then I do have a level at 369.50, which was the breakout to test these all-time highs. So one thing I want to mention on the weekly here, we don't have any harmonic patterns, but we did generate an HSI arrow to the downside. The RSI was completely overbought, the HSI as well, and the AMP RSI. I believe if that volume from last week was higher than the previous week, I do believe that HSI arrow would not have generated, and you would maybe an indication that continuation to the upside would be coming. But right now, maybe it is pausing here. The HSI, the harmonic indicators are suggesting maybe a potential reversal or just cooling down here because it is overextended on the weekly. So those are the levels I will be looking at for this week for the Dow Jones. So definitely keep an eye on the Dow. Jumping over to IWM here. So IWM currently has a bearish crap pattern on the daily. We knew that the low 200s was going to be a level of resistance here for IWM. It went as high as 205 and change, but was not able to hold above that and fell below XA here to 115. It tried to stay above the 21 EMA for a few days here, but did not manage to hold above it, and actually is now 2 days closed below the 21 EMA. So the next level I would be looking at here for IWM would be to come test the 50 EMA here on 189 and change, and then to complete the type 1 reaction for the bearish crab pattern at 186.70, just slightly where the 50 SMA is at. Obviously, if you lose that level, you can come back down to the 200 EMA around 184, and the 200 SMA is around 182 and change, and you can complete the type 1 reaction all the way to target 2 at 177.14. Right now, the HSI was a bit oversold here. You did try to generate an HSI arrow here, but it's not finding any level to the upside here. So I do think you can come back down to maybe the double bottom on the HSI, and that could be, like I said, around the target 1 at 186.70. If it manages to find some volume here, maybe you do come back down to the 50 EMA and find support. The next level you definitely want to break above here would be that 195 range. If you're not able to break above that, then I do think you go lower. But if you do, I think the next level you'd be looking at would be 201.15, and then obviously hop at 211.69. So if we go over to the weekly real quick, you did have a shooting star. It was low, a low shooting star weekly candle here. Obviously, you want to see a shooting star with high volume to suggest that a potential reversal is incoming. So you needed another week here, and that week was a increase in volume to the sell side, and you did generate that HSI arrow because it was oversold, or excuse me, overbought on the weekly. So you did manage to have the same volume, similar volume as last week, and you did slightly close, I believe, below last week's price. I think last week was 193.25, and this current week was 193.23. So you had a close of 2 cents. So we'll definitely see if there's more continuation to the downside. There could be a situation where you can come back down here, maybe form a cup and handle. You find support roughly around the 200 SMA and then continue pushing higher. So definitely keep an eye out on IWM. Jumping over to XLF here, the financial sector. So the financial sector currently does have a rising wedge, which I believe is a rising wedge pattern here. So it's getting very tight here for XLF. We did have some earnings here for the banks that came out on Friday. We had, I believe, was JPM, Wells Fargo, Bank of America, just to name a few of the big ones here. And you did have some volume come in on Thursday, shooting star, and then Friday you did close slightly below here off a decreasing volume. In my opinion, XLF here is a bit overextended here. You did manage to finally go below the RSI here. So that's the level I'd be looking at to see if this plays out. I do believe you come back down all the way to the 50 SMA here, which is around $36. So the next level I'd be looking at here for that to happen is to actually come back down to the 21 EMA, which is roughly around 37, 34, 33. Lose that, then maybe you see the 50 SMA, 50 EMA here on $36, 33 cents, 36.03. Just call it 36 even. Below that, you can come back down all the way to the 200 EMA at 34.73. You do have a gap fill right just below target 2 at 34.05, where the 200 SMA is at. So still too early to see if that's going to come back all the way down there. You still have more continuation of bank earnings this week. So the weekly candle was off of increase in volume to the sell side, but that is a doji candle. So there's a bit of an indecision thing here going on for XLF. It does have a bullish bat pattern on the weekly here. So the next level I'd be looking at would be 37.27. You lose that, then I would be looking at 36.67. There's some confluence around that range on the daily as well. So definitely keep an eye out on XLF. Jumping over to XLE here. So the energy sector here currently does have a bullish Gartley on the daily. You did come and complete the type 1 reaction at target 1 at 85.88, but did not manage to break above that. So right now you are finding you did find resistance at 85.88, came all the way down here. I do have a target at 82.62, which was a previous harmonic level, which you lost early in the week. Went all the way to XA here at 81.74. Tried to get above it here, but is now finding resistance at the 90 EMA where you close below it. So what can we expect here for XLE if there is more continuation to the downside? Volume started to also increase on the daily here the past few days. So if you don't hold support here at 82.51, the next level I'd be looking at would be XA at 81.74. Obviously losing that level, you can come back down to hop at 77.79. Right now the HSI did bounce off of that oversold condition. We still need to see high volume. If that is going to be the case, you're going to find support here. Then you need high volume to the upside to see if you can get out of this range. Otherwise, I do believe you're just coming back for a corrective move and then coming back to create a potential lower low. If we go over to the weekly also has a bearish scrap pattern where you are below the 50 EMA here and you're still hovering on that 82.51 range. So if you're not able to hold this, the weekly, I do have a level here all the way down to $72.94 where there is a gap fill, and that's also where the 200 EMA is at. So definitely very volatile here for XLE here. If you lose this level here, you can come back down to 70s. I do believe the mid to low 70s is a level of support. As we saw the last time it came down here was back in May. You found support and then you continue pushing higher. So definitely keep an eye out on XLE. Jumping over to Apple here. So Apple does currently have a bear shark pattern on the daily. So at the completion of point C here, this came for a type 1 reaction, losing terminal bar at 194.40, and it came down below 182.65. Tested the 200 SMA, found support, but is not able to close above the 90 EMA here. So what can we expect moving forward here for Apple? If Apple cannot break it with the 90 EMA, I do believe we're going to come back down to test 182.65, which is a target 2, and test the 200 EMA, which is around, 200 SMA, which is around 180.82, and the 200 EMA, which is around 178.76. Obviously, if you lose this level, the next level to be looking at would be target 2 to complete the whole type 1 reaction at 169.54. One thing I want to mention here, if this is the first simplest wave and this is just a corrective move, we take a fib retracement tool from point C here, the high, to the lows here. That is currently finding resistance at 382. So this is an extreme level here. If it gets rejected at 382, we can come back down for a potential move to the downside. So if we go over to the weekly here, the weekly does have an inside bar off of low volume here. So Apple does have a weekly, looks like an information happening here, right? So we're going to see if this is going to be more continuation to the upside. You had that HSI arrow and volume did decrease. So if we're looking at another target for this week or the next few weeks here, the 50 SMA, 50 EMA is at 176.95, where there is confluence there as well. So if it manages to get some bullish news here, right now Apple is getting some bearish news with all these lawsuits going on, and so if it manages to break above the 90 EMA here off of increased volume, the HSI did cross the midline. The HSI looks like it wants to continue pushing up, but it could start curling down. So if it decides to pick up volume to the upside, the next level you need to break above here, in my opinion, would be 188.73. A bunch of the EMAs here are curled up here, and that's the next level of resistance I do have. That is also where the start of the gap is. So if you fill that and find support above that, then obviously you come back all the way to fill the gap at 191. And then see if you can reclaim terminal bar at 194.40. If you're not able to do that, then I do think you can come back down. So definitely keep an eye out on the Apple. Jumping over to Microsoft here. So Microsoft during the week, last week, did have an increase in volume here. It managed to finally break above hop here and did create a new all-time high. So what can we expect here? There's also another shark pattern, bear shark pattern here on Microsoft. The volume on Thursday, you had left with that indecision candle, that doughy-ish candle here. So Friday, you did manage to close above that, but on decreasing volume. The HSI, RSI, and MRSI are all signaling here that it's around these overbought conditions, so you could retrace back down. If you're not able to hold above this level here at 386.73, the next level I'm looking at would be to come back down to the 90 EMA around 379.52, and then maybe test the breakout here of hop again. The last time you broke above hop, you kind of had false breakout to the upside. You couldn't hold it, and then you struggled so much here to break above it until just last week, right? So I wouldn't be surprised if you can come back down to test hop again, which is at 374.81, right by the 21 EMA, to see if that breakout is warranted, and more continuation to the upside will be coming here for Microsoft. Obviously, earnings in 2 weeks from Microsoft, so we'll see if also there's consolidating here into earnings as well. So weekly, good candle here, obviously increase in volume to the buy side, which is why you managed to close higher. So you do have this bearish shark pattern on the weekly as well. If you manage to close above, if you manage to continue pushing here, the next level I'd be looking at would be 390. If you could just take the fair retracement tool from where the point C was generated here and the most recent swing low, the next level would be 402.21, which would be the 1618 of that pattern. So if you're not able to break above this level here at 386, 388.47, you come down and look at hop here, and then you have the terminal bar at 351. So still too early to tell whether Microsoft's going to continue pushing upwards, but definitely keep an eye out on Microsoft. Jumping over to Amazon here. So Amazon on Thursday generated a doji candle, and on Friday you managed to close below that. So it was on decreasing volume. So I think, in my opinion, you might need a day or two to see if that candle on Thursday, this doji candle on Thursday, was actually a reversal candle or not. So what are the levels here for Amazon? Like SPY Qs and all these blue chips, Amazon also has a bearish shark pattern. So the next level of support, if there is downside here, I'd be looking at would be the 90 EMA here around 152 and change. Below that, you do have hop here at 149.71, just slightly below the 21 EMA. Losing that, obviously, you come down to the 50 SMA here where the terminal is at 147.26. Below that, obviously, you have 142.72, and you would complete the type 1 reaction all the way to target 1 at 132.82, where the 200 EMA is at. Obviously, that's still too early to tell. I just would be looking here for maybe the test of the 90 EMA, maybe 149.71, which was the breakout here for Amazon last week, right? You had a double bottom here. You want to call it a tweezer bottom here with an HSI arrow. You broke above the terminal bar, and then you broke above hop here. The last time you broke above hop, you had a bit of resistance here. You came above, false breakout, and now you are closing above it. So it would not be surprising, again, to see you come down all the way to hop to test 149.71 to see if there's more upside on Amazon. If we go over to the weekly was an obvious increase in buying here for the weekly, but you are finding resistance here off of the bearish bat pattern on the weekly at hop, which is at 155.75. If you're able to close above that, I do think Amazon can go into the 170s, but still too early to tell. The HSI on the weekly is coming towards that HSI midline, so two things can happen. Either you can bounce from it and go back up to these overbought conditions, which would push Amazon higher, or you come down to that HSI midline, you cross that midline below, and you could come and find resistance here at 155, go all the way down to the 200 SMA, which is XA at 139.14. Obviously testing that would be an indication if there is actually support above the 200 SMA, right? So if you come to test the 200 SMA where XA is at and find support and have increase in volume, that just means a potential opportunity is there for Amazon to go higher. Obviously, if you lose 200 SMA, that could be a little bit bearish, and you can come back all the way down to these levels here. But still too early to tell. Those on the weekly chart, so that may take some time to come to fruition. So definitely keep an eye out on the Amazon. Jumping over to Tesla here. So Tesla on the daily does have a bearish bat pattern. So at the completion of point D, this came all the way down for a scalper's dream to target 2 to complete the type 1 reaction. So what can we expect here for Tesla? If there is more downside, the next level I would be looking at here, but obviously I have a support line all the way down to 177.12. Anytime you go back to see where it loses 223.79, you come all the way down to this range, and then worst situations you came even lower, but that obviously was during the 52-week lows when the market started to correct itself there. So the next level I'd be looking at just within this bearish harmonic pattern here from A to D here. The next level I'd be looking at would be the 786, which would be 209.28 for the next level of support. If it doesn't, then you obviously come down to 202 and then 194 to meet that point A here. One thing I want to mention, the reason why I was not bullish this week as many people were for Tesla is that anytime Tesla tries to break above 258.89 here, more specifically you could call it 260 range as well, it has not been able to do so. The last time you kind of did that, you went up to 276 and you came back down here. You tried back in October and you failed. You actually came lower. You broke above 223.79 here and did not find resistance here. So obviously when you had that selling pressure here, it was actually on increased volume and harmonic selling. So you tried to come up over here last week and a half ago on Monday and Friday and Monday to try to stay above target 1 at 237.99, but did not manage to hold above that level. You had a 2050 crossover, and then the push to the downside actually was on increase in volume. So what does that suggest? To me, it suggests that there is continuation in harmonic selling here. So if there is more downside here, those are the levels I mentioned I'd be looking at. The RSI is coming over hot here, almost oversold. The HSI is a bit oversold here, but it doesn't mean it can't continue going further as it did back here in October and as well in August. So if there is more downside, you can see maybe, like I said, that 209 and then that 194 to meet the 100% retracement of that bad pattern. If you're able to get some volume to the upside, the next level I think Tesla needs to hold above it would be 223.79. You break above 223.79, you can come and gap fill here. There is a tiny gap fill right here, just slightly where the 200, below the 200 SMA is at. You fill the gap there on 231. Reclaim target 1 at 237.99, and then maybe you come back all the way to 258.89, kind of where XA is at, to reclaim that level. If you're able to do that, then the next level would be looking up would be 279, and then obviously 290 to fill that, 289 to fill that gap. Still too early to tell if that's going to be the case. If we jump over to the weekly here, you came down all the way to the 200 SMA off of increase in volume, right? So the push down was warranted. It was on the increase in volume. So the next level here, if it doesn't find support, would come back down to the 200 EMA, which is around $200, that psychological level. So if you're able to find support here, the next level you'd be looking to reclaim, like I said, is 223.79, and then you can continue pushing higher. So the HSI on the weekly did cross to the downside below the midline here. So if this is going to suggest that a potential downside is incoming still, then that oversold condition could be that 200 EMA and maybe even target 2 to complete the type 1 reaction. It already kind of completed the type 1 reaction at the completion of point D here off the bearish weekly pattern. You came back up, it tested it twice, but you can still see that if the target 2 to see if it could complete that type 1 reaction once again. So definitely keep an eye out on Tesla. Jumping over to Google here. So Google on Thursday, also an indecision candle, doji-ish candle, a high volume, and then Friday you had a decrease in volume. You did generate an HSI dot on Friday. Still a bit of an indecision here in my opinion. I want to go over to the weekly real quick. The weekly did increase in volume to the upside here, and you did manage to close way above XA here, so you did close at 142.65. So still a bit of a gray area here. In my personal opinion here, the HSI did cross the midline, or did bounce above the midline, so if there's any continuation here, the next level I would be looking at would be the 150s. Hop is at 152.32 for Google. To the downside here, if it doesn't find any level of support above here, the next level I'd be looking at would be the 90 EMA at 140.68, then come back down to 139.25, kind of close to where that 21 EMA is, and then all the way back down to 134 and change here. That would be kind of close to the 50 SMA, slightly below it. So still too early to see if this is going to come back down. Maybe it is, maybe not. I'm looking at this channel here. It looks like it's just creating higher highs over here and higher lows. So if that is going to be the case, you know, you reach the top here and you can come back all the way down here to 134, kind of like I said, where the 50 SMA. If that's going to be the case, you find support here and you can go for even higher. So definitely keep an eye out on Google. Jumping over to Meta here. So Meta, increase in volume, actually kind of bullish here. 374.49 close on Friday. You had that shooting star off of decrease in volume compared to on Wednesday. Just anytime you see a shooting star and it's off a decrease in volume from the prior close, you can kind of, you know, hold the brakes and say, hey, this is not going to continue pushing to the downside just yet. You would have to wait another candle or two to see if there's actually more follow through. And obviously this wasn't the case. This actually came with higher volume now to invalidate that shooting star. So this could potentially continue pushing for Meta to the upside here. I'm going to go over to the weekly. The weekly does have this bullish crab pattern where it's pretty close to testing all-time highs. All-time highs, the high was at 384.33, so that's technically where a level that I'd be looking at. Obviously, a break above that, we would have to take a fib retracement tool here from the swing high to this point D here. That next level would be at 442.90 down the line, potentially at the 1272. One thing I want to mention is that the RSI is a bit overbought. The HSI still has some room to the upside, and the AMP RSI is approaching these overbought conditions. So that could be where the all-time high is. Obviously, to the downside, you still have a lot of levels to come back down here. So if you're not able to hold above this, the next level on the weekly, the 90 MA is 348.67. Just call it 350. Right now, it didn't kind of validate that bearish divergence on the weekly here. So it's very interesting to see where Meta continues. On the daily, completely overbought as well. The HSI still has wiggle room to the upside, so kind of be interesting to see where Meta goes up to here, if it actually tests all-time high or creates the all-time highs. Obviously, if you don't have volume picking up again, you're actually going to approach earnings soon in 2 weeks to see if there's going to be more upside here. But to the downside, the next level we're looking at would be 363, where the 90 MA is at, and then 358, and then 354. So definitely keep an eye on Meta. Jumping over to NVIDIA here. So NVIDIA had a very bullish week. I did have this dragon pattern, bearish dragon pattern, where it never came to that type 1 reaction here, but it found support above 50. SMA, I did mention that. I said if it continues to push higher above 505.48 and goes past OPR at 520, that it would go to 550, and that's exactly what it did. The high went at 553.46. You did generate this shooting star here, or hanging man I should say, off of increase in volume. So you did manage to close below that on Friday, but it was on decrease in volume. Right now the RSI and the HSI are a bit overextended, so if you do generate an HSI arrow, the next level I would be looking at would be the 90 MA, kind of close to where OPR is, 520.54, to test that breakout. Obviously, you hold above OPR, you come back and reset some of these indicators, and you find support, then you could potentially push even higher. So if we go over to the weekly here, obviously the weekly has a big candle, increase in volume. So that's the next level I'd be looking at here. More towards the downside, see if it retraces or not, because above that, then I really don't have much. If you take these highs here from the November down to the lows here, the next level you're looking at 595, maybe 600 psychological level for NVIDIA. So definitely keep an eye on NVIDIA. Jumping over to Netflix here. So Netflix on Thursday, it did have this doji-ish candle, whatever you want to call this candle here. A bit of indecision here. You did manage to close just slightly below Thursday's close. Thursday's close was at 492.23, and Netflix on Friday closed at 492.16, so 7% drop. So what can we expect here for Netflix? The volume on Friday was decrease in volume. You still have the gap fill to close around 506, 506 and change, 507. So the next level to be looking at would be that gap for the HSI did cross the midline. So if this continues pushing higher, we could take a Fib retracement tool from this bullish bat pattern here from point A to point D. The 127% retracement would be at 523.15. Above that, then you have another gap fill around 566, the 1618 at 571.69. Should you find resistance here and not close that gap fill, the next level I'd be looking would be at 480, which is a 21 EMA, and the 50 SMA here, 50 EMA around 464, then come back down to target 2 at 431, and maybe come down the line to test the 200 SMA EMA right where the gap is around 410. So if we jump over to the weekly here real quick, the weekly is kind of consolidating here, kind of flatlining almost here above the HSI midline, and the RSI is also just in a channel here. So you do have this previous ABCD pattern where you do have target 2 at 518, 555, and 630. So right now you might have a bit of a resistance here. This was obviously during, I believe, earnings. So it has a huge sell volume to the downside here. If you're able to break above that, then it could be very bullish here for Netflix. If you take a Fib retracement tool here from the previous all-time highs to when it dropped here on the bearish news, you're right now above the 50% retracement, and actually just at the 618, give or take. The 618 is at 495.37, so you're slightly below that level. You did go as high as the 618, but did not manage to close on the weekly here. So the momentum has shifted here. I do believe that if you're able to break above 618 here, you could start creating higher highs and higher lows. As you could tell, this may have been a higher high, and you could potentially come back for a lower low here. So Netflix, in my opinion, can still have some more upside, but we'll have to see what the what earnings has to say about that, because the earnings is in 2 weeks. So definitely keep an eye out on Netflix. Jumping over to Bitcoin here. So Bitcoin has obviously been on this trajectory upwards here. It did go as high as 49.1, almost hitting 50K. I did mention the previous weeks below to the Discord that I thought that this was going to come back down to the 50 EMA SMA back before it even went to 49K, and that's exactly what it did here at the beginning of January. And I mentioned again that this was going to continue pushing slightly higher before coming back down to test the 50 EMA SMA for a double bottom. That's exactly what it did off of the news with the SPOT ETF. So what can we expect here for Bitcoin? If you're not able to hold above the 50 SMA here, the next level I'd be looking at would be around 34 to 36K here for Bitcoin. If you're able to hold above that and continue pushing higher, I do believe you're going to go past 50K and continue push towards that all-time high again. But right now it's a bit complicated. If you go over to the weekly, you did generate a shooting star off the uptrend with an HSI dot generated last week off of high volume. So what's the next level here on the weekly? If it does retrace, you can come back down to the 9 EMA, which is around 41.1K. The 13 you have 39, and the 21 is at 37.3. If we go over to the 2-day, I want to share here that there is a bearish D crab. The bearish D crab at the completion of point D, you kind of hovered here between terminal bar and XA. Terminal bar was 45K, XA was at 42.8. You did go slightly higher there, but now you're having 2 days in a row, 2 candles, right? 2 days versus 4 days. That maybe this is a potential tweezer bottom, and you continue pushing higher. You did generate an HSI dot to the upside, but the HSI arrow is looking like it's coming down. Maybe it's going to start curling up. It's still too early to tell, but if it does not manage to find support above XA here, you have the 50 EMA and SMA between 38 39K, and then the deep crab is calling for a type 1 reaction to target 1 at 33.7, which is kind of close to what I was saying, around 34K. So it's going to be interesting to see whether this whole SPY ETF is going to do anything for Bitcoin, but definitely keep an eye out on Bitcoin. Having said that, guys, that's all I have. I will be streaming tomorrow, same time as always, just 15 minutes before the bell. If you want to catch me live, you could link to my Twitch is going to be linked down below. So having said that, I hope you guys have a good rest of your night, and I will see you guys tomorrow. Peace.